10-year note yields end the week with a big move lower. After this morning's job report came in much weaker than expected, those rate cut odds, which have been moving higher, took another step forward. Yields went down to below 380, making new year-to-date lows, actually the lowest since late December, where they closed. Also saw those rate cut expectations shoot higher for September FOMC. Now, we've talked about 25 basis points being priced into the market. Now we're looking at 50 basis points. Fed Fund futures showing about 80% odds that the Fed will cut rates 50 basis points. We also heard from some big name banks adding to that. Clearly, the market right now fearing economic uncertainty more so than inflation. As we continue to watch yields move lower, they've been doing that going back to April when we put in those year-to-date highs at about just north of 470. So it has been a big reversal since the end of April to where we are today. Almost 100 basis points shift in 10-year note yields. Again, seeing yields close at below 380 today, down about 20 basis points from yesterday's close. Now, what does this mean for volatility? Well, it isn't so much the move as we typically see yields moving lower. Volatility moves in tandem. However, it is the speed of the move that we are looking at. That speed has caused volatility to rocket higher. So volatility seeing a big move higher, given the fact that the uncertainty continues to rise. It's not only Fed policy uncertainty, it's economic uncertainty, it's inflation uncertainty, and it is geopolitical uncertainty, all wound into one. So we are seeing volatility hit levels we haven't seen in a long time, despite the fact that we are seeing yields move lower. So again, volatility higher as yields make that big move lower. Lastly, let's talk about next week. There isn't a whole lot on the economic calendar. We do get some modest data points. We do get a 3, 10, and 30-year auction, but really the focus is going to be on the fallout of this move. Where does the market go next? What is the Fed going to say about expectations shifting so rapidly? We just heard from the Fed chair on Wednesday at July FOMC. He talked about the possibility of cutting rates in September, but the market now looking at not only cutting rates, but cutting rates more aggressively than the Fed has even mentioned. So a lot to sift through here. The market will want some answers. We don't have any Fed chair scheduled to speak next week. His next appearance is scheduled to be at the Jackson Hole Symposium at the end of August. So a lot possibly could happen. It'll be interesting to see how this all falls out next week. So after a busy week of data, we had an FOMC, we had jobs data, the market made a big move with yields moving lower, making new year-to-date lows ahead of next week's modest data points, Treasury auctions, and the fallout from what we saw over the last 2 days.